Hey traders, this is Ron Hayden at Market Tamer. Happy Hump Day, happy Wednesday. Hope you guys had a great day. As always, everything in this presentation is for educational purposes only. We're going to lead out here with the cues on Fed days. The Fed cut rates by 0.25%. I was in the car and I had to turn on CNBC just to hear what all the chit chatter was about, and it really was stunning. They were talking about the markets moving in big ways and the dollar was sore. I was just like, oh my God. When you look at what actually happened, and it's one more reason why I don't know why I listened. You just don't get smarter. Anyway, the Qs, they went down and they hit their 20-day in red, and that's the shorter term moving average. We want to really stay above that red line. That gives the bulls the edge in the daily charts, and if we were to lose the 50 in orange, that pretty much ends the bulls' reign in terms of who has the advantage, bulls or bears. When we got below the 20 over here, that was the first sign of trouble. We got below the 50, that was another problem. And then we really had trouble staying above it until we gapped up on September 5th after Labor Day. And now we pretty much stayed on the top side of both. So bulls have the edge. I don't like cup and handle patterns near market tops or whatever the stock might be. That's sort of what's going on at this stage. Now, the bears would argue, hey, there's basically a wedge here, or we have lower highs. I get it. But right now we're above moving averages. So technically, the bulls have the edge. If we take a look at the Dow via DIA, it finished in the green a little bit today, never even got near the red line. Again, it's challenging the all-time highs just from back in July. We take a look at the S&P ETF, the spiders. It did dip below the 8-day in blue, never even got to the 20-day in red. It too is putting in this cup and handle like pattern. Again, it is a double top just like the others. What we really want to see here is just a breach to all-time highs. Again, if that happens, that's basically 302. Sky's the limit. This thing could go as high as it wants. And they talked about QE light and why they don't need it now. These are the Fed heads. Why Powell said he doesn't need it now. They don't need it now. It could be coming down the road. That is also just bullish for the overall market too in terms of stocks. And now, it was sort of showing its face that, hey, it's coming. So it'll be interesting to see how this plays out. But that would just be one more bullish feather in the cap, if you will. Now let's take a look at some other stuff. Let's do gold, silver, and then I have some individual stocks to watch. By the way, dollar didn't do much. So we're not even going to look at it. But here's gold, down about 0.5% on the day. The 50-day remains to be the line in the sand for the bulls. What you're seeing now is here was a high. You're starting to get a lower high here from last week. Now it might even be another little bit of a lower high, but it's all about that 50-day. We lose that, bears get the technical edge, and then even consider bearish opportunities because the support level would be down in here and then down here to the 200-day. If we take a look at the gold miners, GDX, and I want to bring this one in because if we zoom out a little bit, you can see the surge at the end of May and some volume came in. This was more fundamentally driven. Gold is not seasonally bullish over the summer, so this was more just fundamentally, and up it went. Well, now that volume's kicking in, we're breaking moving averages, and the bounces just aren't there. And I've been highlighting this to you guys. So back on the 12th, not too long ago, about 6 days ago, we had bearish engulfing. We tried to get up there to the red line, couldn't, close lower. Then another day lower. Now we try to rally back up, and we're rejected. From a potential bearish trading idea perspective, or what we would call a short, now I'm not a fan of naked shorting because the risk is theoretically limited. And a lot of traders don't realize that just because you have a stop in, it may not hit that number. It might go above it and keep running. And really bad things can happen at that stage. So definitely practice on paper. But just from a bearish perspective, look how the 20-day EMA in red and the 50-day SMA in orange are coming together. That's building some confluence. They're literally pennies apart this stage. Whether it's now or even intraday today, here's what I think, again, for a paper practice fake trade. If it closes above both moving averages, that's the stop out. Otherwise, downside targets, there's a little bit of consolidation in here, 25-ish. Otherwise, it's all the way down to the 200-day, which is going to be really close to that gap up point. That's 24 bucks. That's, 10% plus move. That looks really interesting. If we take a look at silver, I would say it's doing a little worse. It never even got an attempt at another pop higher, really. Its target's the 50-day. The gap fill's pretty much been done back in the middle of August, so I'd go 50-day in orange and then all the way down to the 200-day. If you look at the silver miners, SIL, once they get below their 50-day, There's a one-day low. I don't like one-day lows unless there's mega volume, which there certainly was not. There's a spike low here that wasn't mega volume. So I'd probably just go to the 200-day. Once we close below the 50-day, and again, you can make an argument and say, okay, not only do I want to close below the 50-day in orange right there, but I want to get below the last time we closed below the 50-day, which was 913. That closes 28.65. So below 28.65 on a closing basis, target 200-day. And how about FedEx? That was in the subject line last night. FedEx was getting crushed after hours. They did get crushed. They were down 12% today. They were down about 10% when I did the video ballpark, and they added a few more percent to it. Down at 150.91. And look at that. We're back down at those lows. So if I zoom out here, going back multiple years at this stage, we're talking about multi-year lows. There's a little bit of support, and that wasn't much back in June of 2016. I really wouldn't call that good support. I would say the major support is all the way back down where we had a lot of this clustering right around 120. We could say 125 to 130, something in here, but continual lower highs. The lows are starting to get slightly lower. I mean, there's been a big defending of this 150-ish area. That's why the folks that bought here, they're going to be wrong, which would have been when? December of 18, so almost a year ago. The folks that would have bought in June of this year, wrong. The folks that would have tried to buy maybe in the middle of August, wrong. The folks that tried to buy the end of August, wrong. There could be a lot of extra selling coming in here. So heads up on FedEx. One more reason why protective puts are so valuable. I had a question on Boeing in terms of, what could maybe a bullish trigger look like or something. Here's the thing with Boeing. I would put Boeing in the category of a drug stock. Personally, I'm not big fans of trading them because it's hard enough to try to make money in the markets. Yet when you have these unexpected news events where, drugs are hitting their trial targets, they're not, the FDA gets involved, they're not, whatever. Well, with Boeing, you have these maxes, right? The 737 maxes sitting there talking about maybe changing the name, etc. Maybe they'll be recertified by December or maybe January. Who knows? The stock's already gone from 320 to 380. I mean, pre-collapse, it was up here. To me, there's resistance, there's support, you're in the middle. I think there's a lot of other easier vehicles to trade that don't have this type of news. If I was a value trader, well, why wouldn't I have been thinking about doing it over here? Which I didn't, and I'm not. I'm not trading Boeing, but maybe over here. The fact that it's up 60 points or so over the course of a month, it is breaking out over some previous highs, so technically that's bullish until the next piece of bearish news comes out, and then it rolls over again. The only way I'd want to trade Boeing would be with maybe like a married put type situation if I had stock and then a longer term long put, so I'm not getting killed by theta, because I don't think this is a 45-day length of 45-day put that would be needed just to cover like an earnings report. There could be months that this could still be needed. So maybe even something like a year-long protective put, and then hopefully the stock's going to rise higher than what the value of that put's going to cost you. Otherwise, it's a moot point. Not really interested in Boeing, but it is slightly breaking out here on the daily chart. We take a look at Roku. Roku had a big down day today, 14% drop. Notice it stopped right here on the 50-day. If it gets below the 50-day, all the way down to 100. You're talking 20+% drop. We take a look at Facebook. I haven't talked about this one in a while, and I had a question, why not? Because it's going nowhere fast. Since August, it's been dead weight. And if you look really close, it's staying below the 50-day in orange. And that's that institutional line in the sand. Last time we broke the 50-day, went right down to the 200-day, also coincided with some horizontal previous buying points, which led to reversals, and then up it goes. So above the 50-day, technically bullish. Until then, it's more neutral with a bearish target down to 173. And just take a look at Blue Apron. Not a whole lot of volume, but if you're looking for something cheap to follow, bottom here, was that late June, July? Bottom here, late August. Because this big volume spike is here, it's really dwarfing the other volume, but we are getting above moving averages. The target right now will be up around 13, which is the 200-day. That's over 30% higher than where it is now. So from that perspective, it might be interesting. So that is it. There really wasn't much excitement in the markets today because of what the Fed said. They cut rates. They're saying, well, I'm probably not going to cut any more, but maybe we will. We'll have to wait and see. Maybe we'll do QE light, blah, blah, blah. We'll just trade the market on how it's we'll respond to the market on how it's trading. If it breaks out, it's bullish. If not, it's bearish. to me, there was nothing new that was mentioned today whatsoever, really. They're just trying to figure out what to do, and they're just hoping the whole house of cards doesn't collapse. That's the bottom line. So wish you guys all the best. I'll be back with you tomorrow. Take good care.